Okay, here we go. What is today? Wednesday, and the markets are closed. Purposely wanted to do a video post CPI data so that A, we can see how the markets reacted, and then B, we'll really get a sense at the close, or at least maybe get a hint at the close where things are headed, potentially. And so let's do that. So the Consumer Price Index came out, CPI data, and you can go right to the facts right here. You can jump right here. You don't need to go to Bloomberg. You don't need to go to Reuters. I like Reuters a lot, but you don't need to go to Reuters. You can go right to BLS Bravo Lima Sierra.gov / CPI Charlie Papa India / and look at the data yourself, the Consumer Price Index data yourself, and be a more informed investor. And that's what we're going to do. We're going to just break this down. It's not hard. It's not hard to look at this data and walk through it. So this is what you do. You go to CPI. You go to CPI. It kind of already preps you right here. You can choose PDF, charts, yada, yada, yada. I either choose PDF or HTML. So, and it already gives you a blurb, 0.4. But we want to look at this ourselves. I mean, and just to see, to confirm for our own investment thesis and analysis. So I chose HTML, and we can get right into it. So here's the first table A, table alpha, percentage changes in CPI for all urban consumers. Zoom in on this. All urban consumers, CPI-U. Now, this statistic, that 0.4 that you saw, that was right up here, this is what it is. This is what all this is. All this data we're about to look at, which is not a lot. That's what they're saying. 0.4% increase in March on a seasonally adjusted basis, which is mirroring the increase we saw back in February. So we're going to look at this because yearly, as it states here, all items indexed increased 3.5% right here, 3.5% before seasonally adjust. So here we go. And this is what that means. They put it here, seasonally adjusted data. And then they have unadjusted seasonally adjusted data, or unadjusted 12 months data. And then they have seasonally adjusted data right here. So all this seasonal, unseasonally adjusted, that's all this is, guys, right here on the table A, table alpha. So now let's just get right to it. This is what I do. I look for the major contributors to the CPI increase. And the first thing that comes to mind after looking at this is that the indexes for shelter and gasoline were the primary contributors to the monthly increase in the CPI. Shelter and gasoline accounted for over half of the rise. So we got your shelter and we got your gasoline. What is gasoline, guys? Commodities. Remember yesterday, I told you what was up? Gas was up. Oil was up. Even though I didn't cover a gas chart, oil was up. So that was your indicator right there. Remember, I went through over cocoa, coffee, etc. So the commodities already told you where things were going in terms of inflation. We were seeing an uptick in it. So anyway, let's look at the energy index, which saw really a notable rise of, I believe, 1.1% month over month. So here's our energy and commodities, and here we go. I'm going to try and I'll zoom in on this, but there we go. 1.1 adjusted changes from preceding month. This was a notable increase, 1.1. Prior, 1.2, then it was down, then we are up. Down, then we're down, then we're down. Then we had an increase prior month, and now we're continually to see month over month increase. And then we go down to food because go up to food. Food is right here. And food saw a notable, modest, I should say, but notable 0.1% in March increase. So let's dig into this further. Sticking with food at home versus food away from home. Now we had an unchanged right here, and this right here is food at home. Food at home remain unchanged. 0, 0, 0, 0. Right? You guys tracking? So we had 0, 0, 0, 0. But food away from home rose by 0.3% right here. So this is food away from home. And obviously when you click on these hyperlinks, it goes into more detailed about meats, poultry, etc. But we don't even need to, you don't need to get into the granular if you don't want. You can just see right here on the table what's been changing and what hasn't. Now, in terms of specific increases in categories, you had also just really broad-based inflation. You had apparel, you had Medicare, you had personal, like apparel, Medicare, like all these personal items, they all saw an increase. So broad-based inflation is what we're dealing with, guys. Broad-based inflation. It's not just this. It's not just that. It's broad. We're seeing elevations across many categories. Enough categories here. Now, sticking with, a yearly outlook on energy and food. So for the 12-month ending in March, the energy index increased by 2.1%. So the energy right here, this is unadjusted, 12 months ended, 2.1% for energy. You guys seeing that? And that's its first 12-month increase since the period ending last year. So that's substantial, guys. And then obviously when we get the food, you had 2.2, 12-month unadjusted right there over the last year. So yeah, this is what it is. And this is why at the end of it, I believe it said CPI data was expected at 3.4, came out at 3.8. This is how it came to your total of percentage over the last month. 3.8% over the last 12 months. So this is why inflation is elevated. And this is how you read this. It's really simple. You just make note, you jot this down and whatnot. And let's now, with this understanding of what CPI was, what we were seeing in the charts anyway, now we can see what the markets were doing. And we'll go with the S&P. So this, I know we generally start at the total crypto market, but I'll start with the S&P because this is really where it's more affected at. Now, this is a daily on the S&P. Remember, back in April 4th, this big bearish engulfing candle. Let's take a look at this on a monthly. So on a monthly, if you're looking at this is slightly higher than that prior candle, slightly. If we close the month at 5K, we will have yet another bearish engulfing candle, which would signal that we're going to have a few months, maybe 3 to 6 months of downward trend. I would say we would trend down to the 4,500 level. So I'm really watching April to see how the monthly candle closes on the S&P. If we're down here, if this is an engulfing, then that will give you your indicators for the following few months. Like I said, 3 to 6 months when you're looking at monthly candles. And you're getting this here. The S&P closed lower, from yesterday's close. So yesterday's close was here, right here at 51.45, and now we closed at 51.41. So we closed lower today. Again, that's evident right here. Yeah. So the S&P, the signals are there for we're about to start rolling over. Nasdaq's no different. Again, remember, this was a big bearish engulfing candle, guys. This is big. This isn't something to just sneeze at, and we never went above that. And we haven't gone above that. And I don't think we will, because we're below the 20 now. We're struggling to stay above the 20. Same thing here in the S&P. We have yet to retrace that. And this is why I say be cautious. So I'm going to jump right to the tech stocks, Nvidia, Meta, Intel, before I get into Uniswap. And before I get into the Fed minutes. So look at this. Breaking news, Dow closes 400 points lower Wednesday. So here we go. We're closing lower, but this is what I want to focus on here. Intel unveils latest AI chip as Nvidia competition heats up. So remember, and hold on, before I even get into that, Meta debuts new generation of AI chips. So this is going to be the new thing. Remember, Sam Altman was trying to get chips. Apple is going to use their own chips. They're not going to leverage Nvidia once they get their AI business strategy going. And so the race is on. And a chart like this on Nvidia, remember that bearish engulfing candle I just showed you in the S&P and the index, the NASDAQ, the NDX. You had it here for Nvidia as well. This is a bearish engulfing candle. We have yet to close above it. And at this point, I would be really surprised if we ever get back above this right now. In the near term, I would be really surprised if we get back above 973. And we're also below the 20 moving average here. So it's struggling to get above the 20. And even if it does, again, we are not, they have competition now. So their margins over time will get affected. The financial analysts, people running discounted cash flow analysis, will start to factor that in, especially if Meta, Intel start to have success. Nvidia's margins will start to decrease. Adjustment of margins mean the valuations must come down. So this is why it's important to pick up on these cues and plan accordingly. Again, I would be cautious in buying the dip on Nvidia. Not saying don't buy the dip, but I'm not saying buy all these dips, because you could literally be dipping down here, 586. I personally think it's probably gonna level out. You got a gap to fill here, so you got 822, but really sevens in the 740 to that 661 zone. If we break below that, then clearly we're going to go to the 587 on Nvidia, and then it'll be wait and see. It all depends on what's going on in the market, but that's much further out in my opinion. But this is things you need to be aware of as you're investing, whether you have a dollar cost average strategy, whether you're trading it. Just be aware. I mean, depending on how you're trading it, swing trading. I mean, if you're doing intraday, meaning looking at micro charts, like the 1 minute, 10 second, 15 or 5 minute, then it really doesn't matter. But if you're more of a long-term holder in these projects, then in these companies, then be aware of that. Be cautious of this, because look at this. Remember what I've always told you, these vertical run-ups, it should come down to 492. So do you want to be buying the dip each time all the way down here? Like, you need to get a strategy. You need to get a strategy and say, all right, it comes down to here, I'll buy a little bit. Comes down to here, I'll buy a little bit. Comes down to here, I'll buy heavy. And then we'll see. But you shouldn't just be buying because it's dropping. You should also be buying because you're looking at the financials on these companies and you're seeing margins either stay stable or increase ever so slightly, or they're developing more of a market edge. That's really how you should be buying a lot of these equities, is where after you do your financial modeling, you then apply that value to what you see on the chart. So yeah, just wanted to share that. The CPI data doesn't help. Inflation's going to stay elevated. So let's get to that now. Now we're going to swap back. Done with this. And this is who you're listening to right here, Bruce G, My Tech Academy. Intel. So now with the Fed minutes. Really, which were released today. So by the way, you get to the Fed minutes. I was looking at this. So this is the March 19th to March 20th Fed minutes. And then what you do is you can just Google Fed minutes, and then it'll come up to federalreserve.gov, news events, press releases, monetary, blah, 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 blah. Here we go. Minutes of the Federal Open Market Committee, which is also known as the FOMC. And here is what was discussed. You can look at it in either a HTML or a PDF. And then, I mean, you don't need, I would encourage you to actually read this. I have. So it was very fascinating, but I'll cut to really the two things that stood out to me. The first being that the participants here generally noted, the participants in the Fed, the participants, that means all the players, they generally noted that the recent data had not increased confidence that inflation was moving sustainably down to 2%. Again, the Fed participants stated last month, before this data even came out, I'm pretty sure they saw what was coming anyway. They're not idiots. These guys are very intelligent. Participants, again, noted that the recent data had not increased confidence that inflation was moving sustainably down to 2%. Now, yeah, they're going to consider slowing the pace of balance sheet reduction, but whatever. Overall, they aren't seeing the confidence yet. You get all that in the views, current outlook, etc. So this is really good to read. And where I even pulled what I said was right here, way down, their confidence that inflation was moving sustainably to 2%. Excuse me, the recent data had not increased their confidence. So they're not confident right now in the data, and rightly so. The recent data had not increased their confidence that inflation was moving sustainably down to 2%. Also, too, some of the participants noted that financial conditions might not be as restrictive as desired, which could put upward pressure on inflation. So they get into the commercial real estate markets here and all that, but the participants do not feel that the current financial conditions are restrictive as desired. And what does that mean? What does that sound like to you? That sounds like an increase could be on the table. I'm going as far as to say we might get one cut this year. But if you're asking me off the record, no cuts and a rate hike. That's what I'm thinking. But on the record, I'll be a little more conservative and say we'll get one cut. When that cut will happen, I don't know. I don't listen to the analysts. I don't listen to them. I don't listen to JP Morgan and was it Goldman Sachs saying July. So they said, oh, we expect one in July now. They don't even know. So this is how you read that data. This is how you come to an informed consensus. And then this is how you become better at planning out how to buy tech stocks, any kind of instrument, crypto, etc. So that's what I want to do. That's what I wanted to just share with you in terms of the CPI data. And now let's just get to our usual regular scheduled programming. So here we go. The total crypto market is, it's pulled back some. Crypto overall, now the narrative on crypto, you got to remember when you look altcoin market, still the same, guys. I'm not going to really go over this too much today. Altcoin market, let me go back to a daily. Altcoin market and Bitcoin. So first with Bitcoin may actually start to become a hedge. I think because of the institutional inflow, which is driving a lot of this is a different type of market because of that, because now they're viewing Bitcoin more strategically in terms of inflation hedges and just buy and hold on their portfolios, and being educated on the volatility. Smart money is getting educated on the volatility. If Bitcoin's at 73K and it goes down to 59K, they're not going to panic sell. They are expecting a 30% volatility or slightly more. So this is the new stage of the game now with the smart money, with institutional money, with 401ks, retirement. It's how do they plan this out now? Do they actually hold Bitcoin? Do they hold one of the spot ETFs? So this is what's being discussed. Bitcoin, because it is a global asset, it is not US centric, can be viewed as a hedge against the dollar, a hedge against a lot of uncertainty for preservation of value. And obviously because of the transparency and the ease of transacting is amazing. I mean, you can move hundreds of millions of dollars within 10 minutes on the network. And that's huge. 10 minutes is a short time because the current rails take days. So you imagine moving hundreds of millions of dollars, even look, $1,000 over a weekend with a traditional bank. Well, maybe not 1,000. Let's do 100,000, etc. That's going to take a few days. With Bitcoin, that'll take 10 minutes. So Bitcoin is very liquid. It's very liquid and it's desirable. So again, not saying Bitcoin won't drop. I still have my pre-halving data here to see how that plays out, but keep that in mind. You're not looking at a Bitcoin from 2010 that will go from 73K to 26K in one day or whatever, 2 days. This is going to be a gradual fall here. This is still the realized market cap price given the value of the network. So I still expect Bitcoin to at least drop to 28K. And I'll adjust that as the network value says so on chain. But I just want to put that out there. Think about this in terms of your investing strategy. Long term. This is more about long term. I'm not talking about meme coin strategies and anything like that. Same thing with Ethereum. Ethereum is another blockchain that is being utilized and tested on with institutions. You could look at the high gas fees of ETH as its feature to a certain degree, unfortunately, for all of us. But it keeps things more in line for I should say it keeps out a certain crowd that, we already got enough crowds, so it still keeps out some because of the high gas fees. So yeah, that's really it. Uniswap, that's what I wanted to talk about here. Uniswap, it had a spike up. They had a really innovative governance proposal where, so just putting you guys on some game, all the exchange tokens in crypto literally have no value. If you're buying it, it's literally just a speculative play. There is no value in holding a balancer token, a 1-inch token. Where are we at? Hold on. There is no value in holding this token. I'm not talking about using the exchange. I'm talking about holding their token, their token, their token. But now, and prior, their token. But now they did something very creative. I encourage you to look it up with their proposal to incentivize and create value for the Uniswap token, which is why they had that pump up. This is why they had that pump up. Now I believe they were just served a Wells notice, so it went down. Uniswap is in the United States. They're in New York, if you're not sure. So yeah, whatever on that. But Uniswap is the only exchange token that actually has value. So keep an eye on that. Could be a play for you. It did trade sideways for the longest, so you missed out on some easy grabs at $3, $4 before it ran up. But it looks like it's coming back down. And when it comes back down, if you're interested in it, after you've done your research, maybe consider adding it to your portfolio. Like I said, they're doing a lot of innovative things, decentralization, DeFi, and Uniswap. A lot of the players you see today were inspired by Uniswap. That's why all the DEXs look similar to Uniswap. It looks just like a Uniswap DEX. So that is what I wanted to share with you. And then lastly, let's see, the VIX, good old VIX. So this held. Look at this. This held, and we wicked down to that, but this is good. And we wicked right up to this trend line. So we're going to grind in between here. And I'm expecting once we get to this level, maybe somewhere in May, we shoot up. We shoot up and form new support levels right around here. 1580 will be the new norm for the VIX, and then it'll start to climb higher. That's what I'm hoping. And that means there's going to be more opportunity. But the VIX is doing an excellent job. You can see it's definitely going to pull back, guys. So don't let me, let you think. I don't want you to think, I should say, that I think the VIX is going to be shooting up to 22 anytime soon. But it's within a good zone to signal that volatility is about to come. It's coming, and it's good. That means there's going to be some opportunities, which is good, which is really good. So just keep an eye on the VIX. Remember, when the VIX is low, it's time to go. When the VIX is high being 22 plus, it's time to buy. And the historical data supports all that. Lastly, join our community, My Tech Academy. I'm in there. Chuck's in there. Eli's in there. So we're accessible. We're accessible, and I will see you guys tomorrow. Peace.